So today we'll be doing with practical session. It will be based on price action. So you can see this is the ebook which we had shared to our members. So we'll try to discuss some of the concepts about how I read price action, and also we'll practically apply in the live market. So basically, what is actually price action? The basic definition of price action is what the price is behaving at that particular time or at that particular session what you're looking. So if you look at candlestick pattern, there are different kinds of candles. One, we have a bar chart. Let's say bar chart looks something like this. Right here you are seeing the green and red color, but it is in the form of bar. It is not in the form of candle. It is just a bar chart. And if you go for candles, this is the most commonly used. So these are called as candles, and these are called as stick. Right, this is what is called candlesticks, and we have the red color and green color candlesticks, and each of the candle will tell something about the future prediction of the market. So this is very powerful. If you learn this systematically, you can able to assume the levels with a high probability. Right, you cannot be 100% right, but you can assume the levels accurately. So because of this, right, to give you that concept, we had given this ebook, and for those who don't got the ebook, I will be telling you about how we can access that in the later of the session. But we'll try to stick to this session about practical concepts so that all the people can able to learn in this session. So this is about a candlestick pattern, but there are different candlesticks. We have a hollow chart, we have a Hiknasi chart. Again, if you go for line chart, and there are so many charts available. There is a Renko chart, right? So why actually we are focusing on candlesticks, and what is the purpose of this? So if you look at the different chart patterns, right, candlesticks is one of the most complex and one of the most advanced. Like, it gives a lot of factors, right? If you look at line chart, right, or maybe if you look at Hiknashi, there is not much difference. There is red color, green color, and doji. There are only three different kinds of patterns. But in this candlestick pattern, there are close to 14 different styles, 14 different types of candlesticks. So let me just give you some basic concepts about what are the main things you need to consider while reading the candlestick chart. So whenever you're looking the price action based on candlesticks, this is very important for you to understand the strength of the candle. Whether it is bullish or bearish, you need to understand what is the strength, what is the momentum, whether it is bearish or bullish, what is the momentum of that particular candle. So you can see here there are two different kinds of candles here, green color. So you can see this candle, which is having the complete body, is a strong bullish candle. And you can see this second candle is called as a pin bar. You just remember these patterns because we'll try to trade with the same pattern, and it will be easy for you to apply this in the real market. This is called pin bar. Third is a doji, but you can see the size of the body is bigger. So we can consider it as a moderate bullish. You can see this doji, this is having a small candle. This is like, it's mild bullish. It's not moderate or not extreme. It's a mild. You can see the intensity is going down. So this is an inverted pin bar. This is an indication of reversal in the trend, right? So just remember these 5 patterns. This is a strong bullish, medium, moderate, mild, and the weakening signal, right? So same thing applies on the bearish side. We have a strong bearish. We have this pin bar inverted. This is a strong sign. Here you can see this completely opposite of this. Right? Here it was a pin bar. Here it is completely opposite of this. This is a doji, but with a bigger candle, and this is a smaller candle, and this is pin bar, but in the red color. It is indication of reversal. So in this candle, as I talked that we have red and green color, you know that green is a bullish and red is a bearish. But how actually the candle forms? What is the basis of formation? So if you look at these candlesticks, this is how the candles will be formed. If you see a close look into this, the price opens here, it creates a low, it creates a new high, it closes here. So with this behavior, it is called as a bullish pattern. Why? Because the opening price is lower than the closing price. The closing price is the 4th point, the opening price is the 1st point, right? So it was created some low here. So because of this, we are seeing a wick here and the wick on the upside. But you have to just see the opening and the closing price of the price is nothing but a candle size, and the high and low which is created, it is called as a wick of the candle. If the opening price is lower than the closing price, it is called as bullish. This is very important for you to understand, because a lot of people think that like it's easy to read candlesticks, or they will just miss some of the basic concepts. Because of this, we had provided this ebook, because you need to know the basic foundation strong. You need to understand how the price actually behaves. And this candlestick form in any time frame. It will form in 1 minute, 5 minutes, 50 minutes, 30 minutes, or you can go it for a longer time frame, 1 week, 1 hour, everywhere you can see this kind of price action. Same on the bearish side, this is how the candles will be formed. We have the open here, it creates a high, it falls, it creates a low, it closes at this particular level. So here the open is higher than the closing price. This is the simple difference, and this is very essential for you to know this. So what actually is doji? What is the meaning of doji and why it is an important pattern to identify the market direction? So in doji, what happens is the price opens, it creates a high, it creates a low, and it closes somewhere near to the open, right? If it closes above the close, it's called as a bullish doji, and if it closes below the open price, it's called as a bearish doji, right? So this is what is a doji, which is called as indecisiveness in the market. Whenever you're trading in the market, what actually is happening is it is nothing but the emotions of people, right? People are selling based on the news, the people are buying based upon some analysis what they are doing. If you see this particular candle, right, it is a bearish candle. It's a strong bearish candle. It's not an extremely strong, but a moderately strong candle. Here, what is happening is the fear of downside after a strong fall. So what happened is the market fell, but it recovered here. So that means there is some pullback in the market which is happening. It is not extremely bearish. There is some pullback which is happening. This is how you should read the candlesticks, right? So till now, we understood how the candlestick form. Next, now we are understanding how the mood of the people or how we should interpret in the real market. Second is you can see this particular candle, even though it is bullish candle, but you can see the wick was high and it closed somewhere here. That means there is some selling pressure here. Then in doji also, there is a confusion which direction the market could go. And I'll give some more examples to identify this in the better way, right? So basically what actually you're seeing here is you are looking at the different behavior of people based upon the price. In this case, what is happening is fear of downside. The market opened here, somewhere here, it went down, but they pushed the price up. Because of this, the price closed higher. So this particular candle is an indication of there is a strong bullish trend. That means in the coming candles, there will be a bullish momentum in the market. Similarly, this is a strong bearish. So to understand this in a better way, just remember these patterns so it will be easy for you. This is a strong bullish, strong bearish, moderate, mild, and weak signals, right? This is the basis of understanding the price action. Now let me just go into the different patterns which you need to remember in terms of reading the chart. Whenever the chart is getting formed, right, there are different candles which are being formed in the price action. So this is a strong bearish. Why am I calling it is a strong bearish? Because you can see the closing of the price is almost close to the wick high, wick low, right? You can see this, closely observe this particular candle. It's almost close to the wick close. So that means it's a strong bearish. So that means the next candle is going to be again a bearish. And next candle also you see that it went lower. It broke the previous low. It went lower. It closed somewhere here. And the closing of the price is somewhere again close to the low of that particular candle, right? You need to be very observant into this because the words which I'm telling, it may be confusing for you for those who are watching it for the first time, but this is how you should read the candlesticks. And I'll be telling you how you can access this ebook so that you can learn this. There are so many concepts which is available. And in this candle, you can see third candle, you can see the market went up, it created a new high. You can see the wick size is almost equal to the candle size. So that means it is indicating that the bearish strength is weakening. The next candle, you can see the wick size was higher than the candle size, right? This wick size was higher than the candle size. So that is also telling us, hold on, the market could reverse. The bulls are beating the bears. And you can see the size of the candle is gradually reducing. It was bigger size here. It came into the smaller size. The candle size is reducing, right? Forget about the wick. Just see the candle size. It is reducing. So this is where the doji is being formed. So in candlesticks, right, whenever you're seeing a sharp fall or whenever you're seeing a sharp rally, right, there will be a sign of reversal or sign of doji in the market. So you can see the next candle is nothing but a pin bar. This is a strong reversal signal in the market. And whatever I'm just showing you, this is all theory, but I will show you in practical how it works in the real market. And it works accurately if you learn this, how you can interpret this. From this particular candle, this is where you can make decisions and you can get to know that how the market could reverse into that particular direction. So here is an example of Nifty chart. And this is an old chart which we have added here. And I'll tell you about how you can interpret in a 50 minutes time frame. This is very essential that candlesticks works with a higher time frame. So for 50 minutes time frame, if you look at this particular candle, the first candle is a strong bearish. Why am I telling? Just look at the first candle here. Sorry. Yeah. Just look at this first candle that the closing price is almost equal to the low of that particular day. So that means these people are very sure in the morning, first 15 minutes, they're very sure the market will go down. You can assume this based upon this candle. The second was a doji. It was in indecision. Third was also a doji. The doji means there is no clear direction. But this candle size is indicating there is a bearish trend. In the coming third or fourth candle, you saw the sharp red candle. You can see the size of the candle is huge. And it closed here. So what happened is, you can see this candle, there was a price action, there was indecisiveness, but whenever there is an indecisiveness and it is not able to break the previous high, right? Even if there is a doji, if it breaks the previous high, then market could go upside. But in this case, what happened is the market broke the lower side. It did not break the upper side. Because of this, the market moved down. How many of you got this concept? Please do type yes, right? I'll be taking a small poll once again. You can see here, the analysis is very simple. The time frame is 50 minutes. You look at the bearish candle here. It's a strong bearish candle. Then there was a doji. But in doji, you can see the high did not break the previous high, but it broke the previous low. That means it is downtrending. The second doji, again it broke the previous low. It did not break the previous high. Because of this candle, that in these two candles of 30 minutes, you could have made a decision that the market will go down. This is a probability. I'm just giving you an example about how you can make decisions. So the next candle, you saw the sharp fall, because there are a lot of people who saw this price action behavior. They saw that it is not able to break the high, but it is breaking the lows of the day. So that is a clear indication of the market could fall, right? This is how you need to read this particular price action. So next up, what happened is fourth and fifth candle, you can see here, there was a sharp fall, but the size of the candle was reduced drastically. Right? You can see the size reduced here, and again the size reduced here. But you can see here in the sixth and the seventh candle, right? What happened here is, you can see this candle formation. The wick was higher than the candle size. So that means the bulls are creating new highs, right? They're pushing here. The size of the candle is reducing, the bulls are pushing. And the seventh candle is a confirmation candle that yes, the market could reverse. And from there, you saw the reversal in the market, right? It goes on increasing in the upper side, but even in the bullish side also, you can also see that how the candles are being formed. So this is about the theory. Let's now look at the live chart of Bank Nifty, or maybe I'll go for Nifty, so that it will be clear for you to read this in this particular example. So now you can see in this particular example, what you're seeing here is, this is the 15 minutes time frame of Nifty, right? So I'll just mark the levels for today so that it will be easy for you to understand. So we'll just analyze for this particular days, only for today, what is happening, so that you can able to assume the levels for trading, right? The market opened here, it went up, it went down, and it closed somewhere here, right? I hope you're able to get this concept, right? So this is how the price actually behave. So what is this indicating? This is indicating that in the morning session, the market tried to create the newer high. It tried to break the previous swing high, but it could not sustain. There was a huge selling pressure, right? This is indicating that the participants or the institutions for today, they want to keep the price lower, right? They don't want market to go up suddenly, because there may be a lot of people who have sold calls here, right? That could be the scenario. But what we are seeing in this price action is clearly indicating this level, there is a lot of selling pressure here, right? So the next candle, you can see again, there was that market the bulls tried to push it, but they could not hold on to this level. There was selling pressure, and they closed near to the low of that particular day, right? But what was happening here is, the size of the wick is bigger than the size of the candle. So this is indicating that bulls are holding this particular levels. So that is what is the assumption what we're keeping. The next candle gives the confirmation that the bulls has broken if you look at the size of the candle, it has broken the previous candles. This is called as engulfing candle in the candlestick pattern. So this is indicating the market could reverse from this level. So I'm just going like candle by candle for you to get an idea, but I'll be telling you about how you can make decisions. So this is where what we're assuming. This is a level where we saw that like some big traders are assuming this could be the support for today. This could be the resistance for today, right? I'm just giving you some examples here. So based on this, the next candle with a sharp bullish candle, and now we saw the fall, but this low created by the market was higher than the previous low, right? I hope you are getting to see this, how am I combining the price action with the practical candles, that we are looking at the highs, we are looking at the lows, we are looking at the price action behavior and everything. So what is happening now is the bulls are winning the battle, right? In the morning session, the bears were strong. They tried to push the market down, but these people did not allow the market to break this previous swing low. So this took a strong support here. So now this is the resistance. So the market is trading in a channel now. We have a support here, we have a resistance here, and we are seeing the strong bullish candle being formed in 50 minutes time frame. So this is an indication that if this level is broken, the market could go higher. This is an assumption what I'm making in this analysis. How many of you are able to get this? Please do type yes. I just want your feedback to understand how many of you are able to follow me with respect to candlesticks, and I'll just plot the levels for you so that it will be easy for you to analyze. So this is how actually we are plotting the support and resistance. But if I want to take a trade, how I can take a trade? So now I'm looking at a 15 minutes time frame, right? 15 minutes time frame where each candle is being formed for every 15 minutes of the time being passed. With Nifty, I'm expecting that market could trade higher, right? Because the low created was higher than the previous low. This is one of the confirmation. Second confirmation is what is happening here is there was a strong bullish candle, right? It could not reject sharply in a single candle. There was some split of three different candles. That means the bears were not strong to break this particular level. So there are two assumptions which I'm making here based upon the candlesticks. And now I want to go long at this particular level. And my stop loss will be here. And I'm assuming the market could go up to this particular level. This is a simple assumption which I'm trying to make here. So with that assumption, let us try to see how we can look at options, or let's say if you're trading in options, how you can look for trading, let's say setups. So I'll go for options chain here, and I'll go for call option, right? So there are different options available here. The strike price of Nifty is around 15,700. So I'll go for 15,700 call here. So once again, I'll go for 15,700, or maybe I'll go for 15,600, which is in the money because we have an expiry. The time decay will be very fast. So now I want to place a trade here, but you can see now what is happening is the third candle, it is forming a indecisiveness in the market. It is creating a doji here. I want to go long in this particular trade. I'll go for one lot. So now let me see how this price action will behave. So I'm just taking a bet based upon this particular levels. That market is holding this particular level, right? It is creating a newer highs. I'm seeing the candlestick formation. There is a bullish strength still which is left in the market. So based on this assumption, I expect that, okay, what could be my downside risk? Downside risk is, let's say if market reverses suddenly, and if it breaks this low, I will be exiting this call. This is a risk here. I'll not look at the options. I'll look at the candle of the Nifty, right? And on the upside, it could break higher, and I will be booking profit somewhere here based upon the risk to reward. So now what could happen, right? If you look at this particular chart, I bought call option here. I'm assuming the market is bullish based upon the previous candlestick behavior, right? So how am I assuming that market is bullish, right? I may be wrong or I may be right, but I'm just giving you an idea how you could make decisions. So this is a swing low which was created. This is the first sign, and swing high, which is created previously, was higher than the previous. So this is a second decision. The third is I'm looking at the size of the candle here is bigger here compared to the previous candlestick. So this is giving us confidence the market could go higher. The bulls are in strong condition. They will not allow the market to fall. Let me just show you in the meanwhile. So you can see now, as I told you, that the market tried to go down, but these people are strong here. They will not allow easily the market to fall, right? Because of this, they're pushing it higher. So I'm assuming maybe it could go higher. Like I may go wrong in this, but I'm just giving you an idea. a probability that this could happen based upon the candlestick behavior. I hope you're able to get you're able to follow me in these concepts. I just wanted to show you about price action and candlesticks. So now let me just go to some of the other concepts about how we can enter a trade or ride the trend for intraday, right? So we'll just let the trade to run. Like maybe I'll make a we'll just be looking at this chart, and this will be our stop loss, and this will be our target. So if it goes up, maybe we'll try to book. If you look at the size here, if it goes to here, maybe like we'll try to keep a target maybe at 200 rupees. I'm just giving you an example here. Keeping stop loss is very essential by looking at this Nifty's candlesticks, right? You cannot keep stop loss based on this options chart, but you should keep a stop loss based upon the Nifty candle pattern, right? It's not about like trading like in options or trading in futures. It's about understanding the price behavior, right? So basically what actually we're doing is we're looking at the price action. This is what is very essential. You may buy options, you may sell options, you may buy future, right? It is completely different. It's setting or trading is just one part of the game. The main part is understanding the movement of the price. So here what is happening is I'm assuming that based on the previous swing lows or swing highs, what actually is the prediction which I'm expecting the market. So based on the swing low which market has created, I'm assuming the market will go up. That is my assumption in the market. So how I can trade? Maybe I can buy call, or I can buy futures, or I can sell put. There are multiple ways available. But if you look at options chain, why I selected specifically 15,600 call? Because in options, you know that all the out of money will go to zero. Right? These are people. A lot of people are selling these options. They are selling call. They are selling put. There are huge number of people who are selling the calls and puts. But if I am buying an option, if I'm an option buyer, right, I need to buy in the money options so that whatever the direction I'm predicting, it should work accordingly. Otherwise, right, if I buy this, right, if I buy, let's say if I go for any of the option, if I go for 15,800 call option, right, I might have bought here, but the price is almost similar to this particular. The price will not go higher because of the time decay which is being left. So that is the reason which I have chosen this 15,600, and selecting a strike price is very essential. And now just have a look into this price action which I explained to you. I'm just showing you a live example that how this candlestick pattern is so powerful in assuming the levels. But it will not work 100%. I'm just giving you the disclaimer that it is not 100%. But you can assume the levels of the market based upon the price action behavior and take the trade. I'm not looking at open interest or any of the parameters. Based upon a simple price action, I'm just assuming the levels. This is the level of resistance what I have. I know that this level, if the market goes, it will fall. Why? Because there are people who are selling at this level. So I kept the target somewhere near so that if it comes close to here, I need to exit this particular trade. So this is a simple theory behind this, and I hope you're able to learn into this particular concept. And I just kept the target somewhere near to here, close to 200, and we just have to wait and watch how this candlestick will work. But it's all based upon risk to reward. So you can see the risk here downside was maybe around 10 points, and the target is around 20 points, right? So this is very essential for you to make decisions. Your risk to reward should be in proper. If you're losing 10 points, you should always aim for 20 points or more so that you are getting good returns in the long run. So this is what actually it's touching close to the target, but you can see, I hope you're able to see this, how I predicted this move on the upside based upon the previous candlestick formation. We have a course here. If you go to this course, and we have a course which is called as Option Buying Strategies. It is specifically in Hindi, right? And this course, let me just show you that what is covered into this particular training program. And again, like whatever the course or modules what we're creating, it's all based on practical examples. It's all based on like practical case studies. And also we showed demonstration about how we can make entry decisions in the market. And also we talked about getting started with psychology and understanding the price patterns. So we discussed about bullish pattern formation, how the bullish pattern will be formed, and everything is systematically explained with examples and case studies. It's almost like close to like 4 hours of training content with candlestick price action behavior. And then we discussed about building your strong psychology, because like every day you cannot make money. It's all based on probabilities, but you need to understand how we can place the better trades so that you are able to make money consistently in this market. And also for those who are looking for option buying, we have setups here. We have recorded the live trades about how we have made the decisions based on some indicators, how you can pick a stock or pick an option and place a trade accordingly, right? Everything is being discussed into this module. It is called options buying. And also we have discussed so many things with respect to Nifty and Bank Nifty. So this course is, again, let's say for someone who's interested, it's available. Like we have, for all the training program, whatever we have, we are charging a minimal fees. One of the reason, because like we have this, you'll be getting access to this app, which is an platform. You just go to this particular website. I'm just shared you the link here. In this, you go for courses, and in this, it's called as options buying strategies, right? So this course is worth less than ₹1,000, and along with this, I'll be giving you an ebook on price action for those who are interested. If you're already part of our member for community, you already have this access, right? So just go to this particular website and then click on add to cart, and you'll be having the checkout features. And in this, you can just go through what is the content available, and along with this, you'll also be having, we'll be giving you an ebook on price action, which I showed you, right? We design the course. You can have a look into this. And also, for if you're someone who is watching us actively in a YouTube, right, just go to YouTube channel and just search for trade psychology, right? In this, we have discussed so many things with respect to the price action. You just go to videos. I hope you found this session informative, and thank you very much for your time. And for those who are already part of our community, like, go through this training program. We have created this multiple program, and also please do ask in this questions so that we'll be discussing about this in the coming session.